Welcome. In this video, did ZBCN coin break the downtrend? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we closely examine the chart, we can observe that a clearly defined descending trend line, which has long suppressed price movements and been viewed by investors as a reliable sell zone, has finally been broken to the upside. This descending trend line has been tested multiple times in the past, and each time the price was rejected from this resistance level and turned lower. Therefore, the break of this level is not merely a short-term upward move, but can also be interpreted as a signal of a shift in the overall market trend. One of the most important things to monitor after this breakout is whether the price returns to this level for a technical confirmation move, commonly known as a retest. In technical analysis, a retest is an important behavior that provides investors with added confidence and confirms the validity of the breakout. In the current situation, the price appears to be approaching this broken descending trend line again, and has started to bounce upward from this area. If this movement continues and the price sustains above this level, it would technically confirm the uptrend. A trendline breakout, especially when supported by increasing volume, is considered the beginning of a larger upward movement. It's not enough for the price to simply move above the trend line. It must also hold strongly above it. If the broken descending trend line now starts acting as a support zone, and the price continues to find buyers in this area, this technical structure creates a new confidence zone for market participants. This strengthens the bullish expectations in the market. Another point to consider is how the retest movement develops after the breakout. If the price approaches this area with low volume and then bounces sharply with a significant increase in volume, it indicates that buyers are re-entering the market. In addition, if the price starts forming higher lows and higher highs from this point on, it would be another technical sign that the uptrend has begun. The fact that the broken trend line now acts not as resistance but as support is a very significant reversal signal in technical analysis. This transformation signals that the area where investors previously sold is now seen as a buying zone, and that the power balance in the market is shifting from bears to bulls. Especially if a previously well-respected trend line is followed by a successful retest, it is perceived as a strong long signal by many traders and algorithmic trading systems. In conclusion, based on the technical structure at hand, the price breaking above this descending trend line and then holding this level with a successful retest could be the beginning of a much larger upward move. This structure is part of the classic breakout plus retest plus momentum formation chain that is often seen in trend reversals. In this context, if the price continues its upward movement by gaining strength from this level, it is possible that we will see much stronger price action in the upcoming period. But looking at trend lines alone is not enough. We also need to consider other metrics. Stay tuned. When the chart is examined carefully, we can clearly observe the formation of an inverse head and shoulders pattern, which is one of the classic technical analysis formations and typically indicates the end of a downtrend, signaling a potential trend reversal. This formation is considered a strong technical structure that shows downward pressure in the market is weakening and that buyers are gradually gaining strength. Patterns like this often occur after prolonged downtrends and can frequently be a precursor to sharp and sustained upward price movements. In the current situation, we can say that the three main components of this inverse head and shoulders, IH and S pattern, are nearly complete. First, the price clearly formed the left shoulder. At this stage, sellers still dominated the market, but the price showed a temporary recovery, creating a local peak. Then, the price action dropped further, forming the head of the pattern. This part is typically considered the lowest point and represents the phase where sellers exert their final strength, while buyers begin accumulating from the bottom. Finally, the price rose again, but pulled back before reaching the depth of the head, creating a symmetrical right shoulder. The most critical point of this structure from a technical standpoint is the neckline, which acts as a resistance level. This line is drawn horizontally or with a slight incline, connecting the peaks between the left shoulder, head, and right shoulder, and is typically a level where buyers struggle to break through. However, once broken with strong momentum, it often signals a powerful upward move. At the moment, the price is trading very close to this neckline. If the price manages to break above this neckline with strong volume support, it would confirm that the IH and S pattern is complete and that the market has entered a clear bullish phase. The target of this formation can be determined quite clearly in technical analysis. In IH and S patterns, the target price is calculated by measuring the distance between the lowest point of the head and the neckline, then projecting that distance upward from the breakout point at the neckline. In other words, once the breakout occurs, a price move upward equal to the height of the formation is technically expected. This indicates a meaningful profit potential for investors. However, it's important not to limit the analysis to just the technical target of the pattern. These types of structures also often reflect psychological shifts in the market. Especially larger investors and algorithmic systems looking for bottoming signals tend to interpret these patterns as confirmation of a trend reversal. Therefore, once the neckline is broken, significant buy orders typically enter the market, supporting the upward movement, not only technically, but also through the dynamics of supply and demand. Additionally, the time frame in which the pattern forms and the volume behavior are also very important. In a healthy IH&S formation, volume usually decreases during the formation of the right shoulder, and then increases again during the breakout of the neckline. This rise in volume is one of the strongest signals that the breakout is genuine and marks the start of a real upward trend. If a similar increase in volume is observed in the current price action, it would further strengthen the reliability of the pattern. Once the pattern is completed, the market direction typically shifts, and this can mark the beginning of a new uptrend in higher time frames. The rally toward the target following the breakout usually occurs in a short period with strong momentum. At this stage, while short-term traders should be cautious about profit-taking, for long-term investors, taking positions from this region could be a very strategic decision. When we take a closer look at the MACD indicator, one of the key momentum-based tools in technical analysis, we can clearly observe that it has started to provide positive signals in conjunction with the current price movement. In particular, the fact that both the MACD line and the signal line are trading above the zero level and are trending upward is a highly notable indication that market momentum is shifting in favor of buyers. One important point to understand is that when the MACD is moving above the zero line, it technically means that the short-term moving average is above the long-term moving average, suggesting the market is in an upward momentum phase. This reinforces investor confidence and generally increases expectations for continued price gains. Currently, there is also a positive divergence between the MACD line and the signal line. The widening gap between these two lines indicates that buying momentum is strengthening. Especially with both lines staying above the zero level, it shows that the prevailing positive sentiment in the market continues. From this perspective, the MACD's current positive structure not only confirms the present upward movement technically, but also serves as a strong signal that this uptrend could gain further momentum in the coming periods. Additionally, when we compare current MACD movements with past data, we can observe that similar patterns were followed by strong upward breakouts in price. This suggests that the current setup closely resembles previous instances of bullish momentum, and therefore, the MACD lines trending upward above the zero level may be laying the groundwork for future potential price increases, not just reflecting current conditions. From a psychological standpoint, the MACD's current position holds significant value. Most investors interpret MACD movements below the zero level as bearish signals, and those above it as confirmation of bullish trends. Therefore, when the MACD begins to move above the zero line and trends upward, a large portion of investors perceive this as a buying opportunity. This behavioral pattern leads to increased buying pressure, which in turn drives prices higher. Thus, the psychological impact created by this technical signal directly reflects in the price action, forming a positive feedback loop. It is important to continue monitoring the MACD indicator. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.